in the second quarter. I'm joined now by S&P Capital IQ Senior Director Rich Peterson, along with Recon Capital Partners CIO Kevin Kelly. Good morning to you, gentlemen.
Morning.
It's always so early in the morning. It's like 6 o'clock on the East Coast, and I'm going to you and I'm saying, make these earnings exciting for me this morning. What are we watching?
Well, right now we're seeing the financials. Obviously, we have reports later today from Goldman Sachs, Citicorp.
I know. We all used to say Alcoa kicks off earnings season. No, it's actually the banks. And this is the big week for banks. What are you looking for?
Well, again, looking to see whether there's improvement in those institutions. We had reports yesterday from Bank of America. They were able to keep their expenses in line, so they beat expectations. But still, for the period, earnings are going to be dismal. We're looking for the consensus estimates of decline.
You're not optimistic.
Well, realistic. The earnings have been decelerating since the second quarter of 2014. That was the last quarter we had over 10% earnings growth in the S&P 500. Third quarter 14 was 8%. The fourth quarter was 7%. First quarter of 2015 was 3%. Well,
that's a real downer, Rich. Kevin, give me something to watch here.
Yeah, so the banks differentiate themselves, whether they're asset management firms like Morgan Stanley or they're trading firms like JP Morgan, or they're actually traditional banks like Wells Fargo. So you actually need to figure out where their earnings are driving and where you want to place your investments in that facet. But what's fascinating is that Netflix is the driver of what's going to be happening today, and it's showing that it's a true growth stock. It's up tenfold since they actually stopped doing their buybacks.
Continue on this pace?
Absolutely can do that. It crushed with their international subscribers. This is the type of stock that you want to be in because it's actually investing in its own growth. It's not buying back. It's not doing. It's not.
All right. How high can the stock go from here?
You know what? It's showing that it can continue. It could probably go up another. It could double, actually, over the next 5-10 years because they're getting that international growth. They could be at 100 million subscribers. Overseas, they're only at 20 million.
All right, how does this affect Google? And we have the strong dollar, but this is also a tech company with a lot of long-term business prospects. Do you see the same type of performance there for Google?
No, because they're in a completely different environment. Google's going to be where they drive all their earnings is in search revenue, and so that's why they're modifying. That's why they changed their algorithms to figure out if you're mobile friendly or not, right? And that's and they try collecting as much data as possible. They didn't even make any money off of YouTube, and it generated $4 billion in revenues.
What about Google and eBay? Those two also out today, and they're both expected to report profits that were up from a year ago. Some optimism there, at least.
Yeah, well, Google is another in slowing revenue, so it's been trying to cut costs recently to try to boost margins.
Yeah, with the new CFO Ruth Porat from Morgan Stanley, it'll be interesting to see how she's changing and tightening the reins there in terms of hiring, because the hiring rate is actually declining over time right now.
The fact about Google is that it's failed over the last several quarters to meet Wall Street expectations. It's one of the companies where I think it's on a 6-quarter losing streak in terms of Wall Street expectations.
They also don't account for their stock compensation, so they actually use their own stock as currency, and so they don't account for that in their earnings, but it's one of the things that they've done. So that's been an overhang. They need to control costs. So hopefully they'll start doing that and they'll start reining in and growing.
Rich, as an investor and someone who watches the banks very closely, when you look at the banks, how important is the upcoming political elections and the political environment for U.S. financial institutions? When you've got politicians right now running for the presidency of the United States talking about regulating the banks in this country even more. Hillary Clinton is one of them.
Well, I saw that very evident in yesterday's Janet Yellen's testimony before the House Financial Services Committee when one of the representatives talked about the effect of regulation on the banking institution. And, she was sort of like resigned to acknowledge that regulation does affect the financial wherewithal of the institutions.
Absolutely. You can't buy a bank like Citigroup or Goldman Sachs without anticipating the political environment that may be 1, 2, 3, 5 years down the road.
Yeah, it's a big overhang, and it's always going to continue to be an overhang. And the amount of money that they've paid in legal costs is astounding, right? And Wall Street hasn't changed its ways.
And the amount of people they've had to hire just because of Dodd-Frank.
No, but if you want, and speaking of banks, but going into financial services, PayPal is going to be the new stock that's going to trade on July 20th on the NASDAQ that's spinning off of eBay. So here we go tonight.
I'm excited. I think that's going to be one to watch for sure, especially with payments and mobile payments just soaring.
Then going back to Goldman, we had a very strong M&A season, over $1 trillion so far this year in U.S. M&A.
Good point. Good point. All right, Rich Peterson, Kevin Kelly, thank you guys for joining us this morning.